And now that the whole thing seems to be resolved, the gold that flowed into the US in the tariff bet is now slowly trickling out. Well, hello there, my friends, and happy Wednesday because there you go, recording at 8:30 a.m. on Wednesday. And as you can see, the gold price not over 3,000, not over 3,100, not over 3,200. Well, yeah, I guess it's over 3,200, but slightly over 3,200 now is another $83 move. This one really took off last night. You can see here we were at 6 p.m. Eastern time, 32.48, and seems like in the East they are interested in these yellow door stoppers. So if you fit into the category of people who's ever once described yourself as a long-suffering,
people might have called me a gold bug.
well, then today is your day because speechless on this one. We had a couple $100 days last week. May have another one here today, Wednesday. We'll see where we end up. And plenty to dig into, though, including I wanted to update you on the bank short positions that, as I talked about all last week, that we expected that to see some short covering on that sell off the week of the reciprocal tariffs, which we did get. And fortunately, we'll touch on that in a minute. But here a look at silver, just crossed over $33 in the futures. So I know we had the 35.49, I believe, was the high, right? And silver was back over 35 bucks right as those reciprocal tariff announcements came out. There you see 35.49 is the high that we reached a couple weeks earlier. Saw a print down below 28. That was a brief one, but there we are back over 33. And again, not to say that we knew it would exactly play out like this, but hopefully something just for your own mental sanity as we watch whatever these financial markets have in store going forward. And I say that in the sense that, we'll see, although given what is happening right now, I mean, certainly things could calm down, but regardless of which direction the price continues to go in, I think we're going to be seeing a lot of volatility, and we'll see days where there's silver price up over $1, maybe more. We will see days probably where it is down equally large amounts, although I think just as I grow older and hopefully a little wiser, maybe a little more mature, I'm working on that one too. But I think the day-to-day handling that, at least that's something that's made this a lot more fun and enjoyable for me, where and I would say to ask yourself this question if you're holding physical bullion, even on a day where the price may be down a bit, 10 years from now, do you think the price of silver is going to be higher or lower than 33? And then if you're still worried about what it's doing on a given day, then, well, you're on your own. Or you could write in. Maybe we'll get a silver therapy line going. Hopefully that won't be necessary. And let's take a quick look. Here's the dollar index. Below par again, having another tough day, as you might expect. And fortunately for the Treasury and Scott Bessent, the yields are relatively steady. We've seen some volatility, though here that's back in March 16th. And you can see we're basically right back to where we started. So had that big spike has come in a bit. Now this was when you really saw the stock market selling off and money was flowing into bonds. We've seen stock markets continue to sell off for the most part. Let's take a quick look at the S&P. There's the Nasdaq still below 17,000, and that's just something I would suggest to keep an eye on. If you see days where the stock market is down quite a lot, but the bond market does not rally, then perhaps that would connect with some of the themes that we're going to dig into. So you can see stock markets did have that monster day. I believe that was a record. I don't remember ever seeing anything quite as significant as that, and leveled off, still lower, quite a bit lower from February. And with that said, let us dig into the news because quite a bit happening. Here we see Bloomberg on top of it. I got my Bloomberg subscription back. Was without that for a while, although I'm digging it now. Got a nice deal on it, and interesting to see directly what I would say Bloomberg, unofficially, at least in my mind, feels a little bit more of an institutional audience, perhaps, than CNBC. And here they're talking about gold rising on trade tensions. And their quote from Evie Hambro, thematic and sector investing global head at BlackRock. That's quite a title. I wonder how you fit that on a business card, but mentions I'd love to have a pound for every time someone said it's a record high in gold in the last few weeks. Can certainly associate with that feeling. And in terms of why that might be happening, well, obviously you have gold edges higher. This was a couple days ago as traders react to expanding trade war, which I continue to believe there's going to be one day where there's some agreement. Now, do gold and silver prices just plummet back down at that point? I don't think so. And we will touch on why. Although, here it's interesting. They were noting the Goldman Sachs upgrade, Goldman calling for a rally to 4,000 by mid 2026. Interesting target. I could see that playing out. I could also see things getting a little bit out of control before then. And in either case, just to the degree that Bloomberg is publishing Goldman Sachs giving a $4,000 target, I think has its impact. Also, how fortunate for the banks that they were able to cover a lot of the short positions on the Comex before this latest leg of the rally took off. And let us do a recap there. We posted this on the Arcadia Economics Gold and Silver Daily Substack on Friday. If you have not checked that out, feel free. There's a free version too, where you get at least one column a week, sometimes more. And we cover a lot of these things that I feel are worthwhile to keep an eye on. So again, this was the reporting week that covered the Tuesday before the tariff announcements on the 2nd, I believe it was, and through the following week. So that Wednesday, Thursday, and Friday, when silver was going down below 28, gold below 3,000, kept mentioning that will be interesting to see what was happening. And sure enough, there you see the banks on the gold side closing out 20,338 shorts, adding 2,800 longs. So that's about 23,000 contracts. There in this middle bar, you can see this is the bank short or the bank position. If it's below this purple line, which is 0, that means they are short. Now in gold, you can see we just recently, earlier this year, hit a new record for the most short the banks have collectively ever been. And I will offer the caveat, there are differing views of how hedged they are with offsetting positions in London. I've heard some assert that they're essentially neutral. Not sure I buy that. I've heard some say they're completely naked and they have nothing. I would lean maybe 75% towards that direction, then they're fully hedged. Maybe somewhere in between. We don't know exactly yet, to the degree that there are still some strong correlations between the short positions and some of the price movements, which we will not dig into today. I think there's a couple hundred videos on the channel where we've done that already. So but maybe another day. Yet in either case, you can see here they were pretty darn short. And gold they started covering a couple weeks earlier. Although if we take a look at silver, there they covered 7,000 shorts, added 150 longs. So bringing the silver position back in quite a bit. Now silver had gotten to the second most short, so they were more short than the peak hit last year in the fall. And aside from July 2016, that was the year silver went from $14 to $20 and then came back down. As I'm sure many of you remember, some of you maybe hopped in after that. So ask one of the old timers about that someday. Yet in either case, you can see quite a bit of short covering. Interesting timing, given that that happened the week after Robert Gottlieb of JP Morgan talked about how big these short positions were, said that a bank may be very exposed. Then you have the tariffs, which I still think the actual announcement maybe a little more severe in tariff levels than expected, but I mean, it wasn't like we just got blindsided with some unexpected news yet. Anyway, banks covering a lot of shorts, prices are back up. And now that the whole thing seems to be resolved, the gold that flowed into the US in the tariff bet is now slowly trickling out. You go figure that. Especially odd given that I don't believe there were plans to place additional tariffs on England. So why that was necessary, we'll leave aside for today. But some interesting comments. Tens of billions of dollars worth of bullion flowed into the country, so much so that it distorted U.S. trade data and pushed Comex inventories to an all-time high. So there you have the price hitting all-time highs, while actual Comex gold alleged inventory was hitting an all-time high too. Again, a reminder, things are not going to always be linear in the gold and silver market, similar to how just because people are buying or selling on retail level does not mean that's, you could argue whether you think it should or would be better, but does not mean that's how the Comex futures are going to respond. Fortunately, which, since we've seen a ton of selling on the silver retail level for the past year or two, which I think has finally slowed a bit, yet price was rallying even in the face of that. So anyway, they mentioned the gold that flooded into the U.S. futures exchange warehouses in the tariff-driven arbitrage trade is now slowly trickling out. Now, where could it have gone? Oh, well, there's simultaneously a gold trading frenzy erupting in China as tensions escalate. Here we see China saw an explosive surge in gold trading last week as metal hit successive records. The tensions rose. Shanghai Futures Exchange saw trading volumes hit the highest level in a year last week. Demand for gold is strengthening. Vince Lancy on our morning show the other day talked about how the allocation for insurance companies to start investing into gold was less of a suggestion, becoming a bit more of a mandate. Here you have Goldman Sachs again with their increased gold target, UBS with an increase earlier this week. And then here's the key one. Buying frenzy in China has seen prices move to a premium of around $20 an ounce over international prices, reversing a discount it saw for the majority of the past year when domestic demand was weak. So the metal came there to the COMEX. Now it's trickling out. We're seeing a surge in demand. We're also seeing the price last night jump during Far East trading. Inflows to Chinese gold ETFs hit successive records. US ETFs have been quite strong recently. Here you can see, I won't go through the article, Money Metals was not making it up, but there's been a lot of gold coming into the US ETFs. So lot of things that when you see them all, they fit together. And fortunately, you might say, well, how could one keep on top of such a thing? And really, my secret is that I got access to this guy, and just take a listen to this.
如果更多的宏观 discretionary 基金考虑在美国选举之前减轻他们的负担，他们都记得2016年特朗普火声时发。
Like flipping Pac-Man, look at Mandarin Vince going through the markets. Is there anything my man can't do? Unfortunately, he talked about this one the other day, but along with everything else that's happening, we have India considers gold silver imports from the US to bridge the trade deficit. So we're taking more, the US taking more from India than sending back, and what might they fill that gap with? Oh, about that shiny gold and silver over there. Is this, and I know Vince talked about it, yet somewhere in there it hit me where it's like, if that ends up going through, I mean, are we going to see the US have its gold and silver drained? Is that what's happening here? I mean, that sounds like that was what was happening when you see Bloomberg reporting it, while China is going nuts eating everything in sight. India is considering importing gold and other high value items, including silver, take some of that too, to address Washington's concern of a significant trade deficit. So Washington's concerned, and now this was from a source requesting anonymity. So factor that in as you will. It's also possible that this is someone who sitting there and all this did take place and can't say that publicly. So I'll let you make your own conclusions there. But the US is a leading producer of gold, silver, and platinum, and India can easily source a sizable quantity of these valuable items from the US. Well, Comex has a whole pile just of these door stoppers lying around. And apparently the US is miffed by the trade deficit, one of the reasons they're slapping tariffs, although so far we have not heard the US side of the story or where they're at on this one, but we'll see what the payment mechanism is here because India exports 76 billion and imports 41 billion with a deficit of 35 billion. And they want to increase that trade to about 200 to 500 billion by 2030. So seems like a lot to get done, and at least the discussion, how would we settle it, is sending the gold and silver to India. So different perspective in the BRICS nations, which may sound familiar from last year, because again, it's not just, now here's India talking about taking gold and silver, and it's not just them, because last year, Russia's central bank to acquire silver reserves. We talked about that quite a bit when that came out. Still looking to see if there's any concrete numbers there, but now hearing different things mentioned on a governmental level, which is a change, especially if silver continues to be included. So a few last notes before we wrap up here. Gold fund net inflows have hit a record 80 billion year to date. That is 2 times more than the previous high set in the full year of 2020. Investors are pouring money into gold at a record pace as the market has skyrocketed. Touching on what we mentioned just a moment ago about the ETFs. This one from Pepe Escobar, who I've talked about quite a bit in the past and still hope to find a way to track down one day, but he's in Shanghai, beyond electric, and the tariff emperor is being relentlessly mocked all across China. So I think Pepe has a fair track record of international experience, and just, I'm not saying this to mock anyone, but just pointing out that he is reporting that, suggesting that is the tone in China of how they're feeling about what is going on, which again, just worthwhile as you make your own expectations and assumptions of what may happen with this tariff war. And then lastly, Luke Roman, one of my favorites, highly recommended. Love his premium service. Bit expensive, bit more expensive than the average newsletter, although well worth it. And he mentions the U.S. military ultimately backs the U.S. dollar and U.S. treasuries, and that is true. But as you can see in the chart below, Chinese components back the U.S. military, and Chinese factories make those Chinese components, and the U.S. is tariffing those Chinese factories. Do you see the problem yet? And that's one of the things I think Luke does a great job of pointing out. I agree. And if you want to go to war, but you need them to build your parts to go to war. And okay, there we go. I didn't even see this one. US tariffs on China hit 245%. So it seems like things are going in the right direction. But if you see all of that and you're not sure what to do, when in doubt, just get yourself a silver chopper, Ben. The silver collectible you've always dreamed of. That's 26 ounces of 3/9 fine silver.
That is so cool.
Can you even see his tie flying in the wind while he throws out $100 bills? Look at him getting ready to throw that money out there.
I see that.
Because that's what it looks like when
That even looks like his sorry ass.
So at least if you're going to have a gold mania going on with silver following in the wings, we'll take one last look at the price. There we are at $32.28. And my dear beloved silver, let's take one final look. $33.06. So silver chopper Ben rising in asset value today, which is good news for all of the silver chopper Ben inventory holders. And link to get one of those bad boys in the description field below. And hope you're having fun out there. Appreciate you tuning in today. Go smile. Certainly, if you've been following this for a long time, hope this feels good for you. And I'm honored to have been part of that journey and at any point along the way. But we'll wrap up for now. And if you want to see the rest of Hemke and Holter giggling about the silver chopper Ben, well, that one is coming your way right now.